Hey, what's going on, family? Today is the 19th of April. We're going to talk about this article right here, trying to insinuate that Goldman Sachs is suggesting that the Bitcoin halving, which is due to occur over the next couple of hours, may not drive the Bitcoin price higher. Why? Because of different macro conditions. You know you're in a different realm when you see traditional old financial institutions coming into this new technology and trying to draw their opinion as to what's going to happen post-halving. Isn't that crazy? Like, Goldman Sachs is the bellwether, one of the most renowned names in the old traditional financial space. And now they want to chime in on this new technology and try to tell people this Bitcoin halving may be different. Why? Because of different macro conditions. So look at this article right here. Investment banking giant Goldman Sachs has warned investors against using past Bitcoin halving cycles to predict the Bitcoin price performance after the coming halving event. Here we go. So you guys can also tell, given that that's the case, the quadrennial Bitcoin halving will happen in less than 2 days, and many analysts and investors anticipate that Bitcoin's price will rally after that, as it has done over the past couple of cycles. But Goldman Sachs says things might be different this time because of the prevailing macro conditions. Quote, caution should be taken against extrapolating the past cycles and the impact of halvings, given the respective prevailing macro conditions. So far, as we go through this article, you guys can see that they're giving us very broad terms and words. What specifically about macro conditions are they referring to? Here's a tweet. Bitcoin's fourth halving is imminent. At Goldman Sachs warns not to rely on past trends for future predictions. Well, how did they come up with their price predictions on the stocks that they cover? The clients that they have on their books, how do they predict where a potential instrument is going to go? If they're telling people not to rely on past trends, quote, historical information, that's all it is, to determine what's going to happen to Bitcoin's price, then what else are you supposed to take the information from to come up with what's going to happen in Bitcoin's price if you cannot depend on historical trends? The macroeconomic landscape has changed, and so might Bitcoin's price trajectory post-halving. So what do you think their true agenda is? And I'm talking about Goldman Sachs. What do you think they're really trying to get you to do? If they're trying to get in this space, if they're not in it yet, then maybe they're trying to get you out the way so that in the advent that Bitcoin's price does go down post-halving, that they're already there positioned, ready to scoop in and buy up this Bitcoin. What is their true agenda? During the past halving cycles, demand for risk assets was high and interest rates remained at or below zero in most developed countries. So this is part of that macro condition that they talked about previously in the article. Demand for risk assets and interest rates were low or below zero. But now you have U.S. interest rates above 5%, with analysts growing more skeptical that rate cuts will happen this year. And that's why the last couple of days in the stock market, you guys have seen increased volatility and price going down. It's because everyone is waiting on Jerome Powell to say, look, we're about to cut interest rates, but that CPI data is just not coming down to that 2% target that they really wanted to go to. So interest rates are going to have to stay higher for longer. And if that's going to be the case, and if the Fed doesn't come in and reduce interest rates, then that will inevitably push down stock prices. With interest rates remaining high, it is implied that demand for risk assets such as Bitcoin may be underwhelming compared to previous cycles. Take a look at this website right here. You guys can see that the Bitcoin halving countdown is about in 13 hours, 12 minutes, and 41 seconds. 210,000 blocks. It's about to go down. 13 more hours. Next thing I wanted to show you is that this is the block rewards and all of the Bitcoin halving dates. Here it is today, 2024. It's going to go down from 6.25 Bitcoin to 3.125 Bitcoin. 2028 is when the next halving is. It's going to go down from 3.125 Bitcoin to 1.56. Now, inevitably, when we see this reduction of mining of Bitcoin occurring, the price appreciation needs to increase. Okay, so even though we're seeing that the reduction of block rewards is going down extremely low, like in 2032, you won't even get a full Bitcoin then. Not even a full Bitcoin just to mine it. But you would think that the price of Bitcoin in 2032 is going to be a lot higher than what it is right now. We're sitting at what? $64,000? In 2032, the price of a Bitcoin may be about 1.5 million or even higher, or even 500,000. But that's the progressional spin of supply and demand. You're getting less Bitcoin entering the market. So that is already available. The ones that's already in the market is going to increase the value of those Bitcoins. So that's why you have many financial institutions, many individuals, many people coming in and purchasing Bitcoin now, because in 2032, $60,000 or $65,000 is going to be nothing compared to where it's going to be in 2032. So maybe that is Goldman Sachs' true agenda. As we go lower and lower in block rewards, 2104, 2140, you won't get any more Bitcoin to be mined. 2140, get that. So the miners that are currently mining Bitcoin for block rewards for Bitcoin, the only stream of revenue that they will have by 2140 would be for them to transact Bitcoin transactions and the fees that they get for the transactions. They're not going to get any more Bitcoin. All of the Bitcoin would have been mined, and whoever got it, kudos, because you're not going to get any more in 2140. There cannot be any more Bitcoin mined. Now, from now until 2140, who knows what other invention, what other technology, what other innovation will come in and replace Bitcoin, because that definitely can happen too, to where something better could happen. And we just don't see it on the horizon right now in the mentality of the human mind. But it's there. It can definitely happen. And many of us who are listening to my voice today won't even be around in 2140. Isn't that crazy? Your legacy, the wealth that you're trying to create today, could be a massive impact to those that you leave behind in 2140. Just think about that. All right, so here's a quick price prediction update. I've had this price prediction on my chart since March the 5th, and I haven't changed it. And one of the good things that I can tell you is that as we're approaching this halving event in 13 hours, look at how many times the price in Bitcoin has came to our buy zone. Again, that is telling us that buyers are willing to buy Bitcoin at $60,000. They're finding it value there. When nobody buy at a certain price, that they didn't think that it was cheap and that they can make money at higher levels. So they wouldn't buy this area if they felt that they could get at a cheaper price at 56,000 or that they could get at 52. The last 3 days, you guys can see that the market in Bitcoin has bounced off of our buy zone. So another reason why I'm not going to change my price prediction. So easily we can see how Bitcoin's price is trading within a range right now. Now, if we break that buy zone, we already have a next area right here around $52,000. Okay. And it might happen after the Bitcoin halving event. It could definitely happen. But again, is that a buying opportunity? You tell me. Give me your thoughts, because I'm not going to change my price prediction just yet. I will state that if we don't see Bitcoin at least come up here to this sell zone, as it's trying to move higher now, then we may increase this probability of seeing Bitcoin falling below this $60,000 price level, this buy zone. Okay, so I am done. Go ahead and give me your thoughts though. Make sure you maintain the profitability, and as always, trade different.